Well, good afternoon, everyone. I am here today to talk about something good and something interesting. This is going to be a long video, but it's going to be a very informative video. In this video, I'm going to show you guys how to build a dividend portfolio from scratch. I'm going to walk you through how to get your money right, different instruments of where to different stocks to be able to um, build your portfolio with, the different metrics I use to make sure that a dividend company is worth me investing into, and also the difference between a dividend aristocrat and maybe some other options of stocks that's outside of the norm that you probably even haven't heard of, and then basically show you in the end with a diagram that we're starting today, as right now, with investing $5,000 per year, how you can grow a dividend growth portfolio that you can be able to live off of, retire, and ultimately pay your bills. So, before we get started, make sure you like and subscribe to my channel. Uh, yeah, hopefully all this information is informative, and hopefully you guys enjoy this wonderful and delicious content. And remember, past performance does not guarantee future performance, but and just know that this is educational purpose only. And hopefully you just strap in and make sure you watch the video from front to back, from the beginning to the end, because you're not going to want to miss everything that I have to talk about. Because yeah, we're going to go into depth of from the beginning how to create a dividend portfolio if you are a beginning investor and you're just trying to figure out how to leverage stocks to pay bills or create a portfolio for you can live off of. Let me help you. So let's get started. So starting out, when you are trying to figure out how to create a dividend portfolio from scratch, like in future videos, you're going to figure out uh, your budget. So you're going to budget and you're going to figure out how much you can contribute on a bi-weekly basis. And so with that, you there's apps for this. I use Excel. So you create an Excel document. You're going to break up your bills on a biweekly basis, and you're going to choose like this. You're going to choose and put your bills down, and you're going to put uh, you know what are your expenses. You're going to put your gas, your food, uh, any subscriptions, all your bills split up bi-weekly, so you can figure out how much you can contribute every 2 weeks on a monthly basis so that you can hit your goal of contributing uh, a goal of $5,000 per year. And so once you've allocate uh, to see how much, and you know that hey, maybe you can do more than $5,000 per year. Maybe you can do uh, because $5,000 per year is roughly 450 or $460. If you could do 500, or if you can do $600 per month, then that's even great. You're hitting your goal a lot faster. So just like right here, you put everything that you need down right here, and then you be able to see uh, what what is your net income between your bills on a monthly basis to figure out uh, you're spending money. If spending money to take your woman or your girlfriend out on dates, or just for yourself as as a woman to figure out, put your groceries, put your beauty products, or going to the salon and makeup for guys, haircuts, uh, gasoline, car maintenance, so that you can know the true number every 2 weeks to make sure you know uh, that you can budget, pay yourself first for the dividend growing stocks. Then next, after the budget, you're going to figure out uh, where to buy the stocks. So you want to know, okay, Kadero, I know that I can contribute $500 per month, $250 every 2 weeks to my dividend growth portfolio. Now you got to figure out where uh, where you're going to be able to buy these stocks at, right? So you can use Robinhood, and then you could use M1 Finance, which is right here. So you can create a profile on Robinhood, which is easy. if you're a beginner investor, or you can create Robinhood, and you can create a profile and you can buy stocks on uh, M1 Finance, or you can create a profile on Fidelity. And with Fidelity, you can uh, you can go through the process. And I love Fidelity. I have my 401k through Fidelity. I have I have multiple dividend portfolios with Fidelity. But then you know, once you have a brokerage account, these are called brokerage accounts. Charles Schwab, M1 Finance, Robinhood, Fidelity. So I've tried uh, them all except Robinhood. So, but I decided to stick with Fidelity because I'm comfortable with Fidelity. I love to see the dividends come in. It's clean. I like green because green is like with money, and so uh, I love right here. I love uh, just right here just to show just a little bit, and as you begin to figure out which brokerage you like, then the next step in your journey of creating a dividend growth portfolio from scratch. Step one is to create a budget. Step two is to figure out which brokerage that you like, you're more comfortable with. I chose Fidelity. Then the next step is the actual stocks. And so uh, in the next topic I'm going to talk about dividend aristocrats and dividend achievers, and what they are, uh, why they're important, uh, because otherwise you're not going to know what type of metrics or rubric that you need to look at to even build your dividend portfolio. So uh, right here, this is one of my portfolios, but I just really have this up because to show you that the brokers that I use is Fidelity, but you don't have to use Fidelity. You can use Charles Schwab, Robinhood, whatever you find that's you're comfortable with, right? So next we're going to talk about uh, once you figure out the brokerage that you're going to pick to use to house your money that you feel comfortable with to buy the stocks for your dividend growth portfolio. The next step is to figure out the stocks, what stocks to invest into in the long run that you feel comfortable with that you're going to be able to hold for 10, 15, 30 plus years for that you're going to ride out to your retirement, right? So here, this topic and the chapter where we're going to talk about the stocks. Going to direct you into the direction of, as a new investor, you're going to be like, man, Cadero, I figured out that I want to use Robinhood as my brokerage or Fidelity as my brokerage. Now, how do I know which stocks to buy? Okay, there's something called dividend aristocrats, as you see on the screen. So the dividend aristocrats, I'm not going to go through everything. I'm just going to go through the requirements. I made a video yesterday talking about the difference between dividend aristocrats and dividend achievers, and I'm just going to just highlight just a little bit right now. Basically, all you need to know is that dividend aristocrats are part of the S&P 500 index. S&P 500 is the top 500 companies in the United States. It's part of the S&P 500 index, and basically the dividend aristocrats uh, are heavily vetted companies, stocks that have paid and also increased. That's the key. It also increased their dividends for over 25 years. And so right here, it tells you that the requirements to be a dividend aristocrat is it has to be an S&P 500 index. It has to increase their dividend for 25 plus years, and it has to have a market cap or cash flow uh, minimums or at least 3 billion, blah blah blah. And so uh, I said all that is that to point you to the direction of the dividend aristocrat. So typically, when individuals start their dividend portfolio, they just type that they go to Google and they'll type in the dividend aristocrat list, and then they'll just build their dividend growth portfolio from the dividend aristocrats list because as you see, it's this is organized based upon the most years paid, and all the way down to 25 plus. And as you see, a lot of these companies, what you see is that a lot of these companies, uh, what you see is that a lot of these companies are very you're very familiar with these particular companies, like Cisco, Target, AbbVie, Abbott Laboratories, Pepsi, um, what else? Walgreens, Sherwin-Williams, which is the paint company, Centos, uniform company, T. Rowe Price. You're probably familiar with that with your companies with 401k plans, Chevron, the oil and energy company, Caterpillar, Industrials. And so typically, when individuals as new dividend growth investor, when they want to create a portfolio, I know I did. I went to the dividend I went to the Dividend Aristocrats uh, list, and I honestly, I picked about 10 stocks, and I began, I would say 6 to 7 years ago from that, and then I grew from there. But I have another list of companies. So these are companies that have been growing their dividends for 25 plus years. They're called Dividend Aristocrats. So a lot of people choose Dividend Aristocrats because of it's the stability. So if you're going to build a portfolio that you're going to be able to rely upon, that uh, especially for retirement, you're going to want companies they're growing their revenue, that's their cash flow is increasing. They are shareholders friendly, so they don't mind giving us uh, more and more uh, cash and more dividends and increasing their dividends, but also having that steady history so that, just having more confidence in those particular companies. But as I alluded to in my last video, there's a group also that's right before the dividend aristocrats, and they're called dividend contenders. And what I like about the dividend contenders, which is that these companies have been these companies these companies have been paying their dividend for 10 to 24 years, and uh, a lot of these particular companies you are familiar with. For example, like Visa, Union Pacific, Kellogg's, the cereal company, Verizon, Costco, Best Buy. I love Hershey's, UPS, Waste Management. And as you see, a lot of these companies also, since they've been paying, increasing their dividends from 10 to 24 years, they've also uh, tend to increase their dividends for more than 10%. And so, as we know, as the Fed has been trying to fight this heavy increase in inflation, uh, if you have companies like Kroger and Nike and Analog Devices that tend to increase their dividends to 10, 12%, that's big compounding for your dividend portfolio. More dividend in your pocket, and then you have income that's beating inflation. So 20, 30, 40 years from now, when you decide to retire and you decide to want to live off your Social Security and then also have a dividend portfolio, you can be rest assured that you've invested into stocks that have paid 15, 25 years plus, stable. You can rely upon them, and then you're going to have a set of income that's going to increase, right? You people work on their jobs and tend to not even have increases of at least more than 3 to 4%. And when you at least have a dividend portfolio of about 500,000, 750,000, depending on you stay consistent, that's ever growing, not only in total returns, but also your dividend income is going to be increasing as well organically. So this is why I love the dividend contenders, and I recommend uh take a a closer eye and a closer look on more so the dividend contenders compared to the dividend aristocrats. I love the dividend contenders compared to the dividend aristocrats, but I also love the dividend aristocrats, as well. So I pick your poison of if you want if you as a new up and coming dividend growth investor, if you would like to invest into dividend aristocrats or dividend contenders, it's completely your discretion as a new dividend growth investor, but I'm giving you uh, just options and areas of stocks that you can um, invest into that has been growing a dividend that you can be proud of, and also, most importantly, rely upon as you are growing your dividend growth portfolio. So next, what we're going to talk about is I actually did this research on uh, 8 or 10 or so, I forgot, stocks to give you some suggestions of stocks for you to look into. Now, mind you, I'm not telling you to buy these stocks. I'm just pick these stocks because they're affordable. They have a track record of being profitable, and just give you guys some examples of uh, just point you right into the right direction of where you can look to uh, develop your dividend growth portfolio, and just give you some ideas, right? Okay. So for the first stock, it needs no introduction. It is Apple. Apple stock costs right now $152. For this list of stocks for you guys, I try to pick stocks right under to $200 because I know as new investors, uh, if you are in your 20s or in your 30s, I know some people are trying to graduate college. They're trying to buy their new home, may not have just extra disposable income to create this passive income snowball. So I decided to pick certain stocks that were under $200, but tend to grow either their dividend at a high, large clip, or the total return of the stock has when you invest into it gives you huge returns. And so, Apple has a dividend safety score of 99, so you pretty much really safe in investing into a stock like this. This stock over the past man of like last 10 years, 10 plus years, has had a total return of at least 30 to 40% return on your money, which is great. The next stock is BR. A lot of people haven't heard of BR, but it's a tech it's a technology company, but it deals with the back end of the finances of in the stock market and whatnot. And this stock has a 2.04% dividend yield, has a safety score of 75, has increased its dividend growth last year alone 13%, which is above 10% above inflation, and it costs $142. So right here, this is a great stock to if you wanted to pick a technology stock that's going to grow, that's going to lead you into the future, deal with finances, deal with the stock market, and also deal with technology, also deal with data processing. It's a no-brainer, right? Uh, I added one oak OKE to this stock uh video for you guys. It has a 5.73% dividend yield. It's a slow grower, uh, but this is a high yield dividend stock. So right here, it costs $66.62, but for each share that you own of this, it has an annual payout of $3.82, and it pays out like 95, roughly if you round it, 96 cents per quarter. And so, and also to buy this stock is only $66. So, uh, also the dividends from here, if you hold it for 1 year, it will be taxed at a long-term capital gains compared to buying BDCs and buying REITs where they're taxed at your normal income tax bracket. And so it's not those REITs and BDCs are not taxed as favorable as. So yeah, so one oak is definitely the stock to that's a high yielder. It's an energy field, and definitely it's the way to go if you want a high yield stock in your dividend growth portfolio. I also added a international component, which is Enbridge. Enbridge it has a 6.84% dividend yield. It's a high yielder, but this is a unique high yielder. High yielder. because it also has a pretty decent dividend growth. And I also have the stock in my dividend portfolio. It's a Canadian stock. So, yes, they will take international tax out of your uh, dividend income, which sucks, but it comes back when you file your taxes. You get tax breaks because of the whole international component. But the reason I love Enbridge is because it costs $38.22. As you see, for me, I have roughly 40 shares, and I'm constantly buying more shares of Enbridge, and it's a high yielder, and it definitely can definitely get amass a lot of dividend income from Enbridge. So, if it's the stock called EMB, hey, take a look at it if that intrigues you. Another high yield stock is in the tobacco industry. It's called Ultra Group, MO. It has a dividend yield of 8.03%. Uh, yes, I mean, if you feel uncomfortable investing into an industry that's people, it's tobacco, lung cancer, but I love the dividends. I love it. So for individuals who, are about making money and want a high yield stock and don't mind capitalism and profit on it, the Ultra is the way to go. Costs $46 per share of this, and you see here, I own roughly 60 shares. This is a great stock, and it's also is a high yielder, and it also grows its dividend roughly 3.5-4%. That is great for a high yield stock. The next stock to write down to do research to see if you like is T. Rowe Price. Right now, it's because of the financial markets, and since we are in a recession right now, uh, the financial company right here hasn't been doing good recently since the fallout of 2022. But right now, the dividend yield is quite high, and T. Rowe Price is definitely a great stock. It's one of I believe it's a dividend aristocrat. Costs $112 to own it. And before of last year, since this down market, it was having had a dividend growth of over 10%. I really do truly believe that this stock will return back to glory. But just as of right now, because the down markets, this is a great opportunity to buy. So again, T. Rowe Price, T Row, that's the ticker price, and it costs $112, which is again, boom, it's under $200, right? Now, for the next stock, it's called Analog Devices ADI. It's a tech company, and it deals with is in the semiconductors space, which is in the tech space. Has a dividend yield of 1.85%, which is low, but it's a great compounder. It grows, and it grew its dividend this year at 13%. Last year, it was like 11 or 12%. So it's very stable. This company right here is a dividend contender, so it's in that 10 to 24 years of increasing dividend range. So has shown uh, promise and has shown stability, and it also it costs $186.30. So this is a great stock in the semiconductor space that uh, very interesting. I was going to add this to my portfolio, but I have like five semiconductor stocks, maybe six. Another stock that's this one is under $100 called Amphenol. And so if you're really big into IT and electrical components, then Amphenol APH is the stock for you to write down and do research on. It grew its dividend last year, October 5%, has a high beta, and it's less than $100. Now Lowe's, ooh, needs no introduction. Lowe's is uh, a I want to say Lowe's is a dividend king, meaning that it has increased its dividends for over 50 plus years. And Lowe's has a dividend yield of 2.09%. Safe is safe. And as you see, of all the stocks that I've showed you today, it grew its dividend last year of over 30%. And honestly, this has a illustrious history of increasing their dividends for more than 25%. I would say more than like five times. So I'm not gonna give you an exact number, but and right here it's $200 right on the dot. So for me, if one stock that I will buy for the rest of my life, it would probably be McDonald's, and then it would probably be Lowe's because I've traveled to many places, and I saw that McDonald's was in Amsterdam, the Netherlands, London, Spain, just different styles and serving a different way how to make a burger or whatnot. But it was still McDonald's and Lowe's. I will buy Lowe's and I will just hold it for my lifetime. And I have so much conviction in Lowe's that I actually have it in my Roth IRA, and I buy at least $150 worth of Lowe's per month. That's how much I believe in Lowe's, and I love Lowe's, and has a long track record, a history of increasing their dividend. For the last stock, it's a REIT. It's called Arbor Realty Trust. It costs $14.72 to own Arbor Realty Trust. It has a dividend yield of 10.87%, which is the highest yield of today. But it also is so unique where it also increases their dividend for um, roughly, I would say, above 8%. So have a high yield with a high dividend increase is quite rare. So I love ABR, and so I put it here. So if you want to do research and have a REIT and be able to invest also into real estate sector, the Arbor Realty Trust is the way to go. Lastly, I wanted to show you guys that the next thing is that what people tend to do is that they want to ask and say, hey, what's how many stocks should you have? So typically, as a new dividend investor, you start out with 5 to 10 stocks, and then if you can add more, then it's great. But 10 is an ideal to start out with to have a diversified portfolio. Aim for 20, but just starting out, you don't want to overstretch yourself. Stick between 5 to 10, and then slowly add one. And then if you have 20, then it's great. But if not, if 20 is not the way to do it, then if you can't really afford 20 right now, then 10 is to aim for. And then I just went here, put through an example of you start out with just $1, you invest in $5,000 on an annualized basis, and you have a dividend portfolio of all your stocks put together with a dividend yield of 3% that's been growing. It's going to grow its dividend income for 10% and share price appreciation of 10%. If you start today, you can see that you will be able to amass a portfolio within 20 years of $300,000. That's paying you $10,000 to that $10,000 per year. And if you let it hang 10 more years, you can have $1 million portfolio. 30 years, $1 million portfolio that's paying you 36,000. That's also growing 10% per year, and that's only with a 3% yield. If you have stocks with higher yields in your dividend portfolio, like JEPI, which is a dividend ETF, and then other high yield dividend stocks like WP Carry, uh, uh, Philip Morris, etc. Then you beef up that dividend yield. Then right here, the your dividend goal of making more money on an annualized basis will increase. So, all in all, these are the steps into how you create a dividend growth portfolio from scratch. You figure out your budget. Once you figure out how much you can invest in on a bi-weekly basis, then you figure out which brokers you're going to use. Once you figure out the brokers you're going to use, then you as a new investor, go on the dividend aristocrats list or the dividend contenders list, and then you pick between 5 to 15 stocks, depending on your budget, what you can do to be able to invest into on a monthly basis or on a yearly basis to increase your dividend portfolio. Then you stay consistent for 5, 15, 20, 25, 30 years. And then, boom, once you figure out what stocks that you want and your high conviction that you like, then, boom, you stay consistent and then you begin to see the money roll up. So you see right now, I'm right here where my dividend portfolio is around 42,000. For me, and you stay consistent, your $42,000 portfolio or your portfolio will hit 6 figures, and then once you hit 6 figures, then you hit high 6 figures, and then after a while, with the compounding and dividend increases, and you dripping it and you letting it reinvest in itself, it grows into a high six-figure portfolio, and then $1 million. So if hopefully all this helped. Hope you guys enjoyed this, and I hope you guys enjoy your day. And remember, past performance does not guarantee future performance, but hopefully you enjoyed this and have learned how to uh, start a dividend portfolio from scratch. So hopefully this was informative. Hope you guys have a great day.